Welcome to Know What You Are Investing podcast, where we decode the world's top companies, what they do, how they grow, why it matters. Today's episode is all about TSMC and their Q2 2025 earnings recap.
Welcome to Know What You Are Investing podcast, where we decode the world's top companies, what they do, how they grow, why it matters. Today, we're embarking on a deep dive into the latest earnings from Taiwan Semiconductor Manufacturing Company, or, TSMC. If you're invested anywhere in tech, you know TSMC is often called the absolute backbone of the entire industry.
Indeed it is. And this Q2 2025 earnings recap, well, it arrives at a truly pivotal moment, doesn't it?
Absolutely.
With this global AI boom driving just unprecedented demand for advanced chips, TSMC, as the world's frankly, undisputed leading semiconductor foundry, finds itself right at the heart of this whole technological revolution.
Right in the middle of it.
So yeah, we'll dissect what their latest results reveal about their robust performance, their long-term strategy, and importantly, what it all signals for the future direction of the industry. It's a complex picture, but one with clear opportunities.
Okay, let's pull back that curtain then and really explore this. We've meticulously gone through the Q2 2025 earnings call transcript, the financial reports. There's a significant amount to unpack here.
There really is.
So let's begin with the overall sentiment, the vibe from TSMC's leadership during that Q2 call.
Right.
What was the overarching message they wanted to get across?
Well, the key strategic insights really revolved around a narrative of strong performance and almost relentless focus on AI and advanced manufacturing nodes, and a clear commitment to significant global expansion.
Okay.
TSMC's leadership reiterated their dedication to earning our value, and maintaining a long-term gross margin protection strategy.
That earning our value phrase is interesting.
It is, and it's crucial because it signals they're not just chasing growth, but profitable growth, even as they face challenging external factors like, fluctuating foreign exchange rates and the substantial upfront costs of these new overseas fabs.
Those big investments.
Exactly. Their confidence stance aims to ensure they are the most efficient and cost-effective manufacturer in every single region they operate in.
That emphasis on earning their value really stands out.
Yeah.
And when we talk about advanced manufacturing efforts, the cutting edge of chip production, where exactly are they pouring their resources? Which nodes are really driving things?
The focus is heavily on their N3, that's 3 nanometer, and N5, 5 nanometer technologies.
Okay.
And for those less familiar, these nanometer nodes, they basically refer to the size of the transistors on a chip. A smaller number means you can pack more onto a single die.
Which means more power, better efficiency.
Precisely. Higher performance, greater energy efficiency, more powerful chips essential for today's most demanding applications like AI. These nodes, N3 and N5, are seeing incredibly robust demand.
And where are they building these things?
So in terms of their physical footprint, they are actively expanding operations in the U.S., Japan, and Germany. But it's vital to recognize that Taiwan, it absolutely remains their core innovation and manufacturing hub.
Still the heartland.
Oh, absolutely. They have substantial plans for new fabs there, cementing its central role.
All right, let's move past the strategic vision and dive into the concrete evidence.
Yeah.
The numbers. How did TSMC's Q2 2025 financial results actually stack up? Did they meet expectations? Beat them?
Oh, they absolutely delivered. Revenue came in strong at US $30.07 billion.
Wow.
Which marks an impressive 44.4% year-over-year increase. And here's where it gets really telling. This figure critically beat their own guidance.
Okay, beating guidance is always a good sign.
It's a powerful signal of very healthy underlying demand, especially when you consider the broader macro uncertainties, in other parts of the global market. It suggests their core business is exceptionally resilient.
A 44.4% jump year over year is, significant. But revenue isn't the whole story, right? What about profitability? Are they managing to maintain those crucial margins, or are the expansion costs starting to maybe weigh on them?
Good question. So earnings per share, EPS, were NT $15.36, which translates to US $2.47. And that beat analyst expectations by $0.16.
Another beat. Okay.
Now, for the gross margin, it landed at 58.6%. This was actually a slight sequential decrease, just 0.2 percentage points.
Okay. Why was that?
Primarily attributed to an unfavorable foreign exchange rate, the strong NT dollar, and also some early margin dilution from their new overseas fabs as they start to ramp up production.
So the cost of expanding globally.
Exactly. It's a cost they're absorbing now for future growth. However, what's positive is that the operating margin actually improved sequentially by 1.1 percentage points to 49.6%.
That's strong.
Very strong. And return on equity, ROE, stood at a very healthy 34.8%. So this tells us that despite some of those external headwinds, their core operational efficiency remains incredibly strong. They're effectively managing costs beyond currency fluctuations, which is key for long-term investor confidence,
Yeah, definitely. So even with those currency and ramp-up headwinds, the internal operational machinery is really humming. Breaking down the revenue further, which business segments were the real powerhouses this quarter? Where did we see the most dynamic growth?
High-performance computing, HPC. Undeniably the powerhouse.
Right, AI and all that.
Precisely. It accounted for a massive 60% of total revenue and grew a robust 14% quarter over quarter.
60%.
Yeah. Smartphone revenue also saw a healthy increase, up 7%, making up about 27% of their total. IoT grew by 14%, that's 5% of the total, while automotive remained flat, also at 5%.
Okay, so HPC is dominant. Any surprises?
Well, what's truly fascinating and maybe an indicator of future shifts is data center and edge, or DCE. It saw a remarkable 30% increase.
30%. But wasn't it small overall?
Yes, exactly. It currently accounts for just 1% of total revenue.
Yeah.
But that exponential growth in a pretty nascent segment strongly signals where massive future investments, particularly in AI infrastructure, are likely to flow. It's definitely a segment to watch, not for its current size, but its velocity.
That DCE growth is certainly a clear indicator.
Okay.
And how did their most advanced technologies, those nanometer nodes we discussed, N3, N5, how did they contribute to this impressive revenue picture?
Right. In terms of revenue breakdown by technology, the N5 process accounted for 36%, N3 for 24%, and N7 for 14%.
So N5 is still the biggest chunk from the advanced nodes.
For now, yes. But when you combine these, N7 and below, what TSMC calls advanced technologies, well, they made up a significant 74% of their total wafer revenue.
3/4 of their revenue from the leading edge.
Exactly. This isn't just a technical detail. It unequivocally demonstrates the industry's accelerating shift towards leading-edge demand and, frankly, TSMC's commanding an indispensable position in supplying it. They are truly at the forefront.
It's abundantly clear that AI is a monumental driver across the tech landscape. But how specifically is TSMC seeing AI monetize its own strategy?
Yeah.
Beyond just being a component supplier, are they using it themselves?
Oh, absolutely. The earnings call strongly highlighted sustained AI and HPC orders, which are, undeniably central to their current growth. But what's genuinely compelling, I thought, was that TSMC also reported internal productivity gains from using AI worth approximately $1 billion.
$1 billion, just from internal use.
$1 billion. This isn't just about selling chips for AI. It's a profound testament to how even the most advanced manufacturers are leveraging AI internally to redefine their own operational efficiency. It sets a new benchmark, really.
That's incredible. It shows AI's value not just in products, but right there in their operations.
Precisely. Streamlining their incredibly complex business model.
So beyond the obvious data centers, are they seeing AI trends popping up in other areas, things that might become significant drivers down the line? What's on their radar for the next wave?
Without a doubt. They're keenly observing early trends in on-device AI, so AI running directly on your phone or laptop.
Right, not just in the cloud.
Exactly. Customers are designing chips with larger die sizes for this, seeing about a 5% to 10% increase. It's still early days, but the potential for future revenue from this decentralized AI processing is substantial.
Makes sense. Anything else?
And then there's the truly visionary side. They mentioned the very early stages of humanoid robots.
Yeah, the robots.
Yeah. Chairman C.C. Wei shared this fascinating anecdote about a conversation he had with a customer who believes this market could eventually be massive, potentially even exceeding the electric vehicle market by 10x.
Wow, 10x EVs. That's ambitious.
It's certainly a long-term vision. They also underscored the increasing global demand for sovereign AI initiatives, nations wanting their own AI capabilities and their own evolving edge AI roadmap. It shows a broad, forward-looking strategy for AI that goes way beyond today's data centers.
Humanoid robotics, 10x EVs, that's definitely something to keep an eye on, even if it's far out. So with all this escalating AI demand, where do these advanced AI applications plan to go next in terms of the technology nodes, pushing the limits even further?
Precisely. Future AI apps are expected to rapidly migrate to their N2, that's 2 nanometer, and also the A16 nodes.
Okay, N2 and A16.
Yeah, because of the superior efficiency gains.
Yeah.
To give you a sense of the advancement, N2, for instance, offers maybe a 10-15% speed improvement at the same power level. Or and this is maybe even more important for AI, a remarkable 20–30% power improvement at the same speed compared to their current N3E node.
That power saving is huge for data centers.
Absolutely critical for those energy-intensive AI workloads. And in the immediate term, supply for their current leading nodes like N3 and N5, it remains extremely tight, just underscoring the relentless high demand.
Right. The analyst Q&A sessions, they often provide the most granular insights, don't they, into the challenges and opportunities. What were some of the key questions this time, and how did TSMC respond?
Yeah, always revealing. A major recurring concern from analysts was how TSMC plans to manage the financial impact of, well, foreign exchange rates, the FX impact, and also the margin dilution from their rapidly expanding overseas fabs.
The costs we mentioned earlier?
Exactly. TSMC clarified that every 1% appreciation of the NT dollar against the US dollar, it reduces their reported NT revenue by 1%, and importantly, their gross margin by a notable 40 basis points.
40 basis points per percent, okay.
So the Q2 exchange rate alone created about a 220 basis points headwind to gross margin, and Q3, well, it's projected to see an even larger impact, maybe 260 basis points.
Ouch. And the overseas fabs?
They're contributing too, particularly the one in Arizona. They expect a 2–3% annual gross margin dilution in the early stages from these overseas sites. It's a real, measurable cost of their strategic global expansion.
Those are definitely significant headwinds. Despite these pressures, are they still expressing confidence in hitting those long-term gross margin targets? Or are they maybe signaling some adjustment?
No, they express strong confidence, really strong confidence in achieving their long-term 53% or higher gross margin target.
So how do they square that circle?
Well, this confidence isn't just optimism, right? They emphasize their ability to strategically leverage other factors to counteract these pressures. Things like dynamic pricing adjustments, optimizing their product mix towards higher margin chips, ensuring high capacity utilization in their fabs, and maintaining rigorous cost control.
They have other levers to pull.
Exactly. And they've successfully navigated similar currency challenges in the past, suggesting they have a well-rehearsed playbook for this kind of situation.
Okay, that makes sense. And what about their Arizona fab ramp-up? There's been a lot of public discussion, speculation maybe, about its progress and timeline. Are they speeding things up there? And why?
Yeah, they confirmed that robust customer demand is, in fact, the main driver for accelerating the Arizona fab ramp-up.
So it's demand pull.
Very much so. Their first fab in Arizona, Fab 21 Phase 1, is already in high-volume production with N4 technology, and they're significantly speeding up the 3-nanometer production in the second fab by several quarters.
It's a quarters faster. Okay.
And construction for their third fab there, the one for 2-nanometer and A16, has also begun. Again, with plans to accelerate based on that unrelenting, strong AI demand.
What about the U.S. government incentives, the Cheech IPS Act money?
They appreciated the U.S. government's increase of the investment tax credit, the ITC, from 25% to 35%, but they reiterated that customer demand remains the primary consideration for their aggressive ramp schedule. It's a clear signal. Demand dictates the pace, the incentives help, but demand is king.
That's a powerful statement about market forces driving strategy. Given this intense focus on AI, what is TSMC's outlook for their non-AI related segments? You mentioned smartphones, auto. How are they seeing those markets?
Well, while AI remains undeniably strong, TSMC expects only a sort of mild recovery in the overall non-AI end market segments for 2025.
Just mild.
Just mild, which does raise an important question about the broader economic landscape beyond this AI surge, doesn't it? They are very mindful of potential tariff policy risks and broader geopolitical considerations, especially their impact on consumer-related and price-sensitive markets.
So some caution there.
Definitely some caution on the non-AI side.
Yeah.
And one last point from the Q&A on the critical topic of advanced packaging, specifically CoWoS.
Right, essential for putting those big AI chips together.
Absolutely essential. They stated that demand continues to be very healthy and very strong for AI applications, and they are actively working hard to, quote, narrow the gap between the surging demand and the available supply for CoWoS capacity.
Still playing catch-up on capacity.
It sounds like it. It's a crucial bottleneck for many advanced AI chips, making their efforts here absolutely critical for the entire AI supply chain.
So with all these dynamics, the AI boom, the global expansion, the margin pressures, what does this all mean for TSMC's broader strategic roadmap? Where are they placing their biggest long-term bets?
Okay, zooming out a bit. In Arizona, the plan is just monumental. We're talking 3 fabs.
3 in Arizona alone.
3. 1 already in high-volume production with N4. A a second for 3-nanometer nearing completion and accelerating its ramp, and a third for 2-nanometer and A16 now under construction. This represents a staggering long-term investment of US $165 billion.
$165 billion.
Yes, and it's projected to account for 30% of their future 2-nanometer and more advanced capacity. The goal is to create an independent, leading-edge semiconductor manufacturing cluster right there in the U.S.
That's an enormous commitment to build a whole cluster. What about other key regions? Japan, Europe, how are those expansions going?
In Japan, their first specialty fab in Kumamoto is already running in volume production. Reports suggest it's achieving very good yields, too.
Good start there.
Yeah. And a second specialty fab is scheduled to start construction later this year, though it's pending local infrastructure readiness. So, steady progress in Japan. Germany is also firmly on track with plans for a specialty technology fab in Dresden, backed by strong government support.
So these regional fabs are key for diversification.
Critical. Diversifying their supply chain and addressing specific customer needs in different geographies. But despite the significant global expansion, Taiwan remains unequivocally their core innovation and manufacturing hub.
Still number one.
Absolutely. They have ambitious plans for 11 new wafer manufacturing fabs and 4 advanced packaging sites in Taiwan over the next several years. This includes multiple phases of 2-nanometer fabs in both Hsinchu and Kaohsiung Science Parks. It cements Taiwan's role as the indispensable heart of their advanced tech development and production.
Wow, 11 new fabs in Taiwan plus the global sites. With such aggressive expansion, what is their capital expenditure guidance for 2025 looking like? Are they boosting it?
Interestingly, no. Their CapEx guidance for 2025 remains unchanged, still in the range of US $38 billion to US $42 billion.
Despite all the acceleration.
Yeah. They acknowledge the ongoing foreign exchange pressure as a real factor, but they emphasize their well-defined strategy to counter that mix of strategic pricing, product mix optimization, maximizing utilization, and strict cost control we talked about.
So discipline on spending, even with the growth.
It demonstrates a highly disciplined approach to investment, yes, even amid such strong demand and ambitious expansion.
Okay, let's shift our focus now to the absolute bleeding edge of the technology itself. What's the outlook for their next generation nodes and the advanced packaging solutions that will really power the next wave of AI and HPC?
Right, the future stuff. The N2, or 2-nanometer node, is firmly on track for volume production in the second half of 2025.
Next year.
They anticipate its ramp profile will be similar to N3, but with an even higher revenue contribution. That's driven by stronger demand from both smartphone and HPC applications.
And then?
An extension called N2P, offering further performance and power benefits, will follow in the second half of 2026. And then there's the A16 node. This features their groundbreaking Super Power Rail technology.
Super Power Rail, what's that do?
To put it simply, it's a new way to deliver power within the chip itself. It essentially reroutes power delivery for really unprecedented efficiency and performance gains. Very clever stuff. A16 is also slated for volume production in the second half of 2026.
So N2P and A16 both hitting around the second half of 26.
Seems like it. A16 is designed to provide significant improvements over N2P, making it ideal for the most complex HPC products. And looking even further out, the A14 roadmap is on track for volume production in 2028.
A14 in 2028.
Delivering yet another full node stride from N2, it just showcases their relentless pursuit of leadership.
That's an incredibly aggressive, packed roadmap. Just relentless innovation. Given the tight supply we've discussed for the current advanced nodes like N3 and N5, how exactly are they managing that demand right now? What gives them an edge?
Yeah, supply for both N3 and N5, as we said, remains very tight. And the situation is expected to persist for probably a couple more years.
Oh.
But TSMC boasts a truly unique advantage here, their gigafab cluster design.
Gigafab cluster.
Yeah, it means multiple, highly integrated fags operating in close proximity. This gives them unparalleled flexibility to adjust and convert capacity between nodes like N7, N5, and N3 because there's high commonality in the manufacturing tools they use, often 85% to 90% commonality.
So they can switch production lines more easily.
Much more easily than competitors might. They are actively converting N7 capacity right now to support N5 demand and N5 capacity to support N3 precisely to meet this surging demand. This inherent flexibility is a critical competitive advantage. It lets them respond much more swiftly to market needs.
That makes a huge difference when demand spikes like this.
Absolutely. And on the packaging side, CollOS, as we noted, continues to see explosive growth, especially for AI. TSMC is developing a whole variety of advanced packaging technologies to meet diverse customer needs. They emphasize that these are directly related to their leading-edge nodes, and they employ a clear customer prioritization strategy to manage that tight capacity.
Got it. So they're focusing the CoWoS capacity where it matters most strategically.
That's the idea, managing a true bottleneck for many advanced AI chips.
Okay, before we wrap up this deep dive, let's quickly hit some other significant milestones from the past quarter. Beyond the financials and roadmaps, what else should our listeners know about TSMC's recent activities?
Sure. A few key things. TSMC announced the launch of the TSMC Tokyo Lab on June 12th. This initiative is a strategic move to promote advanced semiconductor research, education, and crucially, talent incubation.
Investing in the future workforce.
Exactly. Which is vital for the long-term health and innovation of the whole industry.
Makes sense. What else?
Their board of directors also approved a cash dividend of NT $5 for the first quarter of 2025, declared back on May 13th. So demonstrating their ongoing commitment to delivering shareholder return.
Good for investors.
And further demonstrating their future tech leadership, reinforcing that roadmap we discussed, they unveiled their next-generation A14 process publicly at the North America Technology Symposium on April 24th.
Giving a preview of 2028.
Pretty much. And finally, showcasing their commitment to broader corporate responsibility, TSMC committed to an ambitious carbon reduction path, aligning with the Science-Based Targets Initiative, or SBTI, back on April 22nd. So aligning their aggressive growth with environmental sustainability goals.
Okay, good to see that focus too. Well, that brings us near the end. Thanks for listening to Know What You Are Investing podcast, where we decode the world's top companies. What they do, how they grow, why it matters.
Yeah, so as we look forward, the central question for TSMC really is how they'll continue to navigate these intricate complexities, the global expansion, the persistent economic pressures, all while steadfastly, earning their value, as they put it.
A balancing act.
A huge balancing act. Their ability to drive the future of AI and high-performance computing through that unwavering technology leadership, well, it's going to depend on their strategic agility and maybe something for you, the listener, to think about. Consider the profound implications an even more energy-efficient A16 or A14 chip could have. Not just on data centers, but on global computing power, the limits of what AI can achieve. The future of artificial intelligence, in many ways, really hinges on TSMC's relentless pursuit of shrinking and optimizing those transistors.
Thanks for listening to Know What You Are Investing podcast, where we decode the world's top companies. What they do, how they grow, why it matters.